Welcome to Solidarity Spotlight, the place where we share with you bleeding edge stories. I'm your host, Solidarity. Let's discover what's happening today in blockchain. The cryptocurrency market is experiencing a significant surge, with Bitcoin achieving a groundbreaking milestone by reaching an all-time high above $117,000. This rally is largely fueled by institutional demand, as evidenced by spot Bitcoin ETFs recording $1.18 billion in inflows, the second highest daily inflow since their launch. Analysts attribute this momentum to calmer macroeconomic conditions and rising institutional adoption, which have reignited interest in Bitcoin as a regulated, long-term asset similar to gold. The shift reflects growing confidence in BTC's role as a hedge against monetary debasement, particularly amid concerns about the U.S. dollar's performance. While short-term risks like trade tensions and upcoming CPI data could trigger profit-taking, the medium-term outlook remains overwhelmingly positive due to deepening institutional adoption and accelerating integration into traditional financial systems. This surge has broader implications for the market, potentially attracting more institutional capital and reinforcing Bitcoin's legitimacy in diversifying portfolios. Simultaneously, Ethereum has surged past the $3,000 mark, driven by a rare flip in futures volume over Bitcoin. This momentum signals renewed confidence in Ethereum's ecosystem, particularly as developers expand its utility beyond mere currency to decentralized applications and smart contracts. The rise in ETH's price and trading volume could accelerate the migration of projects from competing blockchains, further consolidating Ethereum's position as a foundational layer for Web3 innovation. However, sustained growth depends on Ethereum's ability to maintain scalability and low transaction costs amid increasing network activity. Beyond Bitcoin and Ethereum, Binance Coin BNB is climbing towards $700, fueled by a fresh $1 billion token burn and corporate treasury plans. Token burns reduce circulating supply, creating scarcity that often drives price appreciation. Combined with broader market optimism, this move could strengthen BNB's utility within the Binance ecosystem and attract yield-seeking investors. If sustained, BNB's rally might inspire other exchanges to adopt similar deflationary mechanisms, reshaping tokenomics across the sector. In Asia, China's state-backed blockchain infrastructure, Chang'an Chain, has achieved a throughput of over 100,000 transactions per second, a benchmark rivaling traditional financial networks. This development is part of China's broader strategy to prioritize blockchain as state-controlled infrastructure for data exchange while avoiding any association with cryptocurrencies or stablecoins. The advancement underscores a geopolitical divide. While mainland China bans cryptocurrency trading, Hong Kong is positioning itself as a crypto hub with maturing regulations. Chang'an Chain's adoption in real estate registration and supply chain digitization could streamline bureaucratic processes and enhance data transparency. However, its success may inadvertently highlight the limitations of decentralized networks in regions where state control dominates technological innovation. Corporate treasury strategies are evolving, with Universal Digital acquiring 10 Bitcoin as part of its pivot toward Bitcoin-centered reserves. The company divested holdings in Solana, Cardano, and other tokens to fund this acquisition, reflecting a strategic bet on Bitcoin's superior long-term asset status. This move aligns with a growing trend among public companies to integrate Bitcoin into their financial architecture, a shift that could normalize cryptocurrency reserves in corporate finance. Meanwhile, DDC Enterprise announced a $100 million Bitcoin strategic partnership with Animoca Brands to develop yield enhancement strategies for corporate Bitcoin holdings. Such collaborations may establish replicable frameworks for public companies, blending traditional finance with digital asset innovation. Regulatory developments are poised to shape the industry's future, with the U.S. House of Representatives declaring July 14th to 18th Crypto Week. Lawmakers plan to vote on the Genius Act, which would enable private companies to issue stablecoins backed one-to-one with liquid assets. The bill has already passed the Senate, and House approval would send it to President Trump, who has publicly endorsed making America the undisputed leader in digital assets. Additionally, the House will consider the Digital Asset Market Clarity Act to establish a regulatory framework for cryptocurrencies and the Anti-CBDC Surveillance State Act to block a central bank digital currency. These legislative efforts could reduce regulatory ambiguity, encouraging institutional participation and innovation. However, the effectiveness of these policies will depend on balancing consumer protection with market freedom. Malaysia is also refining its crypto regulations, proposing amendments to ease token listings on exchanges while tightening custody and governance requirements. The changes would allow exchanges to list certain assets without prior approval, provided they undergo public security audits. However, heightened scrutiny may apply to privacy coins like Monero and meme coins due to volatility concerns. If implemented, these rules could make Malaysia's digital asset market more competitive while setting precedents for regional regulatory harmony. In the NFT sector, data reveals a resurgence in buyer activity, despite declining trading volumes. Sales counts jumped 78% in Q2 2025, though total sales fell to $1.24 billion from $1.59 billion in Q1. This divergence suggests a shift toward lower-value, community-driven purchases, signaling broader accessibility rather than speculative frenzy. The trend could sustain engagement in the NFT market, particularly as creators and platforms focus on utility-driven collections. Projects like APEN5 are capitalizing on this momentum, with its $NFT token launching on Binance Alpha, an invite-only platform for advanced traders. The listing, endorsed by Tron founder Justin Sun, enhances APENFT's visibility as a one-stop NFT platform on the Tron blockchain. Such integrations may bridge NFT ecosystems across chains, fostering cross-platform liquidity. Artificial intelligence is converging with blockchain through partnerships like Coinbase and Perplexity AI, which aim to deliver real-time crypto data for enhanced trading decisions. Perplexity's AI-powered browser, Comet, will integrate Coinbase's market data, allowing traders to analyze token movements and screen opportunities via conversational interfaces. This collaboration could democratize access to institutional-grade analytics, empowering retail investors with AI-driven insights. However, it also raises questions about data privacy and the potential for AI to amplify market volatility through algorithmic trading. Infrastructure projects are advancing. As Bitmining Limited pivots from traditional mining to Solana validator operations with a $300 million treasury allocation. The move leverages Solana's high throughput capabilities, where over 81% of all decentralized exchange transactions occurred in 2024. Bitmining's transition reflects a broader industry shift toward participation in scalable networks, which may decentralize validator ecosystems and incentivize staking. Lightchain AI further exemplifies innovation, surpassing $21 million in community-driven funding ahead of its mainnet launch. The project's AI-native virtual machine and interoperability framework could unlock new use cases in decentralized finance, such as data-driven derivatives and compute markets. That concludes today's Blockchain Spotlight. I would love to know your thoughts. Thanks for listening, and don't forget to follow me for more spotlights. See you next time.